crosses the 57,000 mark for the first time ever.
Tata Motors bets on commercial vehicles business, targets gain of more than 600 basis points in market share by FY27. Meanwhile, for passenger vehicles, the company says FY26 is expected to be muted. However, over 2 to 3 years, it targets a market share increase of going all the way up to 20% from the current level of 13%.
Hello and welcome to a fresh edition of Markets Forward, your go-to show where we aim to get you all the key data points to gear you up for the next trading day. I'm Reema Tendulkar. With me is Surbhi Upadhyay. And Surbhi, a good session, right? Considering the big rally that we had on Friday, we closed up at the 25,100 mark. So gains intact.
No, absolutely. Gains intact and, inching higher slowly, bit by bit, at least for the Nifty. So it wasn't bad at all, actually. I mean, just to kind of put things in context, this market at the Nifty level has been in a trading range for a good 3 weeks. And with today's move, we're right at the top of the trading range. The high of the range, actually, to be specific and precise, is 25,116. We touched that mark. We touched it at the open. We touched it again intraday. We couldn't quite decisively close above it or cross it. But nonetheless, we're right there at the top of the range. So that's the good news. And we've got lots of support from positive global cues. I mean, the non-farm payrolls data was quite positive. And there's hope in the air that finally we'll see some breakthrough on this US-China trade deal as well. So that really helped matters. And our own RBI bazooka. Financials were leading the charge today, and we'll talk more about that as we go forward. But mid-caps were not to be left behind at all. In fact, the mid-cap index outdid the Nifty with a gain of over 1%. There was some profit-taking in areas like defense, some profit-taking in real estate. That index was up and about on Friday as well. But all in all, Reema, like you're saying, it's been a good streak for the market so far, and that continued on Monday.
Indeed, broad-based rally, and look at the way the mid and the small cap indices closed up with gains, and so many individual stocks up 7-8%. We'll talk more about it. Here's a quick lineup of what we have for you in store today. We start with the top movers and shakers. Hormuz joins in. A slew of brokerages weighed in on RBI's policy action, the impact on banks, NBFCs. Meanwhile, MCX shares rallied after it got SEBI's nod to launch electricity derivatives. We'll break it down for you on our show, and finally we'll tell you the key market events to prep you up for tomorrow's trading session. But on top of the show, let's get a handle on Dalal Street's big movers with Hormuz.
Indeed, it was a good day for the broader markets and the benchmark indices alike. And starting off with the gold financiers, they were one of the big beneficiaries of the RBI policy announcements on Friday. Continuing from where they left off, both Manappuram and Muthoot ending at a record high in today's session. IIFL Finance not quite at a record high, but an 8% surge, an outperformer among the three. And CSB and Federal also, which have a significant gold loan exposure too, ending 4 to 6% higher in today's trading session. In some of the newsmakers of the day, but before we get to that, the NBFCs too traded higher in today's session. Look at 5-star Business Finance among the top gainers on the Nifty 500. Capri Global, we heard a news update on our D Street chatter just a few minutes ago. Canfin Homes, M&M Financial, all of the NBFCs seeing healthy gains today. The newsmakers in today's session, of course, Mahanagar Gas after its analyst day ending 7% higher despite brokerage views being mixed. MCX ended at a record high. The MCX news had a cascading effect on IEX as well. That ended higher. Kalpataru projects after the order win. And Hyundai Motors, not news flow, but crossed its IPO price intraday and ended just close to those levels. Stocks that did end at a record high in today's session. And look at Affle India, look at Indigo. There's no surprises there in terms of Indigo. No surprises for Bajaj Finance either, as the record date for its stock split and bonus issue is approaching. And BSE also adding another 2% to its tally today. And lastly, some profit booking names, of course, led by the defense stocks, and not surprising considering stocks are up 50 to 80% in a month. BLS International and Swiggy also seeing some bit of profit booking. Swiggy, of course, up 17% in the last 1 month, seeing some correction from elevated levels. Back to you guys.
Okay, Hormuz, thanks very much for the wrap of all the action. Let's actually take this forward with our guests. We have Mayuresh Joshi of Marketsmith India and Jay Thakkar, Head of Derivative Research at ICICI Securities, joining in. Gentlemen, good afternoon to both of you. Jay, if I could come to you, this financial rally that my colleague Hormuz was just describing, when everything was literally on fire. From a levels and price perspective, looking at the charts, where do you still see good upsides when it comes to financial stocks?
Surbi. As far as the financials are concerned, definitely. I mean, that was one sector which was consolidating since the end of April. I would say the third week of April. Surbi. I mean, the Nifty made a high somewhere in mid of May, but 3 weeks prior to that, the financials almost topped out, and then there was clear long wait for the RBI monetary policy before it actually finally provided a breakout on the upside. And now since it has, so I think that those levels which are acting as a very clear resistance, which are 56,000 on Bank Nifty, somewhere around say 26,000 on Fin Nifty. And of course, Nifty, it has just provided a breakout today, I would rather say. So, that would continue. But then 56,000 and 26,000 on Bank Nifty and Fin Nifty respectively will act as a very crucial support on an immediate basis, at least for June series. So until these levels are held, I think, the overall bias should be positive. I mean, any dips, if at all, should be utilized as a buying opportunity on the upside. I think Bank Nifty positionally is heading towards the levels of 60,000. And Fin Nifty is heading towards the levels of 28,500. So these are the levels to watch out for, and the prominent names out of the financials, maybe Bajaj Twins, Chola Finance, Shriram Finance, or probably the private sector banks, and most of the PSU banks as well are all looking positive. So any dips in these stocks should be utilized as a buying opportunity, and as well as the power finance stocks like REC and PFC should also be on focus. I think there has been a good base formation out there. We have been seeing short covering out there, and the FIs have also now clearly indicating that the shorts are getting covered from 15% net long to 21% until yesterday, and we continue to see further short covering. So things are positive. I mean, if Nifty manages to hold on 24,900, so it's to heading towards 25,500.
25,500. Got that. All right, Jay. Let's actually stay on this subject and get some fundamental inputs in as well. Nifty Bank, as we know, is at record high levels. Banks, NBFCs, all charging ahead. We've got Sudarshan joining here with what the street view is. On the fundamental side, what are brokers really saying?
So it's record high for Nifty Bank for second straight day on the back of double bonanza provided by RBI. It has announced 50 bips rate cut for repo rate and also 100 bips rate cut for CRR. Now after that, all the brokerages have written on the which all banks or NBFCs will be biggest beneficiaries of RBI's rate cut. So Nomura believes that CRR cut is going to benefit mid-sized banks, and those banks are IndusInd Bank, AU Small Finance Bank and Federal Bank. Also, it will benefit deposit growth constrained large banks, and in that, those names are Axis Bank and HDFC Bank. Goldman Sachs believes that beneficiaries of RBI policies majorly are Axis Bank and HDFC Bank, also NBFCs with higher proportion of fixed rate assets, and here those names are SBI Card, Shriram Finance and Chola Finance, and companies having better mix of fixed versus floating rate assets and liabilities, and here those companies are AU Small Finance Bank, IndusInd Bank and IDFC First Bank. As per Bernstein, announcements by RBI will benefit or are major positive for banks against NBFCs. Citi believes that it's positive for banks where deposit growth is closely monitored, and those names are majorly HDFC Bank and Axis Bank. Also, liquidity easing via CRR and sustainable liquidity could improve credit flow into NBFCs, and biggest beneficiary of this is going to be Shriram Finance. UBS says banks requiring greater liquidity will benefit, and those names are AU Small Finance Bank, HDFC Bank and again Axis Bank. On NBFCs, UBS says sustained decline in PSU bond yield could lead to additional 10 bips benefit in cost of funds in FY26 for companies like PFC and REC. Also, NBFCs with higher share of bank borrowings to benefit more, and those names are Chola Finance and M&M Finance. Also, lastly, Bandhan Bank was in focus because after RBI policy announcements, RBI Deputy Governor had said there is no specific regulatory measures related to MFIs, and remember, amongst all the banks, Bandhan Bank has the highest exposure to MFI. Also, RBI Deputy Governor has said that MFI business should stabilize over next few quarters. So on the back of the majorly announcements made by RBI, you have been seeing a big move in banks and NBFCs for second straight day.
Indeed, thank you very much for that. Mayuresh, we spoke about Shriram Finance and how that is one of the picks that you have in the broader financial market. But what about something like Bandhan Bank, which, Sudarshan was talking about with the regulatory burden easing? UBS is highlighting some other beneficiaries like Chola, M&M Financial, even a PFC REC or an AU Small Finance Bank. Any of these make it to your buy list?
So afternoon, Rima, again. No, I think outside the names that I mentioned, I think Karur Vysya Bank is something that we continue holding on to our portfolios. Our take is that the kind of loan growth and the diversification Karur has, specifically in terms of the exposure towards the commercial and the corporate segment, where they've got very, very tight underwriting risk parameters put in place, which is getting reflected by superior asset quality that they're probably reporting. I think with interest rate cuts assumed and the transmission expected to happen, a lot of stress on the corporate stroke commercial part of the business will start going down. And therefore, I think banks with exposure toward these segments, where Karur already has a very, very strong underwriting profile, might start improving significantly in the next few quarters. So I think one of the names outside the larger ones, Karur is something that we continue remaining positive.
Okay, let's get to the other story today. Ride-hailing platform Rapido is all set to foray into India's online food delivery space with significantly lower commission rates as against the rates set by current players like Swiggy and Zomato. Shilpa joins in with this story and how it will impact customers and shake up the competitive landscape.
Well, yes, you're absolutely right. We're given to understand is that Rapido has started onboarding restaurants as it is looking to launch a food delivery pilot. It wants to enter this industry. And in Bengaluru, it has started onboarding restaurants. And what it is doing to get restaurants on board as against the Swiggy and Zomato is it's offering a flat fee structure where it is giving a flat rate of about 25 rupees for orders of 400 rupees or below and a flat 50 rupees for orders that are above 400. Now, this works out to a commission of about 8 to 15% and is much lower than the commission that is currently that Swiggy and Zomato charge, which is anywhere between 15 to 30%. Now, it has also asked restaurants to come up with like a curated menu, offer a couple of items at around 150 rupees that can help drive orders as Rapido looks to launch this service. And we are given to understand that probably by the end of June or beginning of July is when the pilot will start with Bengaluru. Now, why this is interesting is that so far the food delivery space has been a duopoly. Swiggy and Zomato have been the leaders in this space. Many have come and gone. Uber Eats, Food Panda, even ONDC that tried to disrupt the space has not had much success. And if you look and if you draw a parallel to this with the ride-hailing industry also, there was a similar situation with Ola and Uber. But that's where Rapido came in, and over the past couple of years, Rapido has garnered market share in the ride-hailing space. In fact, almost 15% in when it comes to cabs and about 33% when it comes to rickshaws also. So it is now looking to take probably this playbook and enter the food delivery space. And while with restaurants, it is looking at onboarding them and drawing them away with like drawing them onto itself platform with a lower fee structure. It will be really interesting to see how it will bring on customers whether it will use its existing customer base, whether it look at cross-pollination, how it enters the space is what will be interesting to see, and what that changes for the entire food delivery space in India. Back to you.
Okay, interesting developments there. Thanks very much for that, Shilpa, for bringing us the story. Jay, Eternal actually started making some interesting strides. The stock has been up, I think, 13-14% in the last 1 month or so, after being absolutely bombed out for a long time. And now we have this new development which sounds slightly negative. What do you see ahead, Swiggy or Eternal? Swiggy, I don't know if you have enough price history, but maybe Eternal in that case?
Absolutely, Swiggy has less of price history, but then Eternal we have derivatives data as well along with the price chart, and mostly we have seen shorts build up in Eternal. We did see some covering happening due to which the stock managed to bounce back from those levels of 200 until the recent highs of 260, which is almost 30%. I mean, there was huge shorts out there. It had reached to quite an extreme, wherein the indicators out there, the sentiment indicators out there also reached to quite oversold territory. But then the stock has managed to bounce back. I think it will continue to consolidate, should be within this range of 300 to 200 or probably lower for a few months or quarters now, because we have already seen a very good rally coming in eternal. I mean, prior Zomato, right from 30-40 rupees until say 300. So the stock had already given 10x kind of returns, and now after entering into derivatives, we have mostly seen market participants creating short positions out here, although covering it, but then not it's not fully covered. So I think that it's time for some consolidation with this kind of development which is happening. Definitely it will impact the company negatively, is what I believe.
Got that. Let's talk about the other big story today. SEBI has approved MCX launch of electricity derivatives. Now, the stock surged close to about 6%, and an opportunity opens up to capture a share in what is one of the largest derivative segments globally. Meanwhile, SEBI's nod to MCX has also boosted IEX in trade today. Vamakshi is here with the details.
Well, absolutely, Rima. MCX has managed to hit an all-time high today. They've received approval from SEBI to launch electricity derivatives, and these derivatives in turn will enable generators, distribution companies, as well as large consumers to hedge against price volatility, as well as manage price risk more effectively. Now, this development is positive because this was largely awaited by the street. In fact, in the fourth quarter con call as well, the company said that they were actively working to launch these electricity derivatives, and with the nod coming in from SEBI, this is a step in the right direction. This enables the company to diversify the company's offerings as well as capture a new segment of market participants. Of course, it is a very big opportunity. Power derivatives are amongst the largest markets in the world, and therefore we saw a very strong up move as far as MCX is concerned. But this also had a rub-off effect as far as IEX is concerned, because keep in mind that IEX has an agreement with MCX for its underlying prices, and MCX had earlier mentioned it will share up to almost 10% of transaction fees on revenues. So therefore, this brings about a new revenue stream for IEX, and resultantly, the stock was also surging higher in trade today.
Okay, all right, Vamakshi, got it. Absolutely an electric session for MCX, so to speak. Thank you for that. Mayuresh, let me ask you, IEX, MCX, how do you find these two exchanges?
So I think MCX looks a tad bit more interesting. I'll tell you why. I think the kind of ADTVs, the average daily turnover, which had been lagging over the last few quarters, are expected to make a comeback with the expectations of the electricity futures actually starting to make a huge impact in terms of the overall ADTV volumes. The second aspect in terms of gold prices being higher, I think the overall mix in terms of crude at 58% for FY25, natural gas at 17, and bullion at 25%. I think that was the mix that largely ensured that the overall EBITDA compression that had happened because of elevated employee stroke technical costs largely remained range bound. Having said that, I think the expectations with new contracts, the expectations that at some point of time, maybe silver as an optionality in terms of silver options available on the exchange as well, might also start propping up volumes. Around 2,700 crores of cash onto the balance sheet, which is 7% of the market cap. OCF to EBITDA is around 115 odd percent. ROE is 34%. So I think the dynamics from a balance sheet perspective are there. It just needs these triggers to ensure that all the aspects that the street is probably looking at are probably kind of through. So I think the momentum might very well continue for MCX.
Jay, big move on MCX, 7% up. IEX also. What are the charts telling you?
I think, Rima, MCX definitely looks relatively quite positive because, the stock is trading clearly at the lifetime high. So momentum is well in the favor of the bulls. In fact, when I look at the derivatives data too, Rima, we have seen good liquidation on the long side. And thereafter, at the end, when the stock had fallen previously in the previous cycle, a few shorts had got built up. And the recent run-up which we have seen has come mainly on account of short covering. And now the overall OI or the open interest in the derivative segment is quite low, and the fundamentals are definitely supportive technically too. The stock is making high have bottomed, and that clearly makes the case for a fresh strong build-up as well for this stock. And the kind of a fresh breakout which we have seen, Rima, I think positionally it's heading towards the levels of 9,000 plus. I think that, as Mayuresh rightly mentioned, if at all, it get further boost in the option segment as well. And the mini contracts in the gold and silver which we have launched, 10 grams on each. I think going forward, the overall turnover is likely to increase. And like BSE, the kind of rally or the income or the overall turnover which we have seen, 82, which has increased. Likewise, NCX 2 can see that with the active option contracts going forward, and which can help this stock to inch towards 9,000 plus levels. On an immediate basis, now I believe that 7,300 will act as a very crucial support.
Okay. All right, gentlemen, thank you very much for joining in with all the updates today. Appreciate you being with us on the show. Well, we have to take we have to take a very quick break, come back on the other side. We will come back with today's key corporate voices and the key events to watch tomorrow.
Welcome back. Let's take a look at some of the big corporate voices that we had through the course of the day. First up, Hindustan Zinc will hold its board meeting on the 11th of June to consider an interim dividend for this fiscal. Speaking to CNBC TV 18, the management struck an optimistic tone on the prospects of silver. The company projects that demand will outpace supply, with the deficit likely to persist all the way till 2030. Silver prices could move to $41 to $42 per ounce by early 2027, and because of the buoyancy in silver, they could revisit their guidance on volumes in July 2025.
Okay, well, let's talk about the commentary we got from ABB as well. The management of ABB Global told CNBC TV 18 that the company is seeing some delays in large orders from heavy industries due to tariff-related developments. However, the overall pipeline remains robust. The company's management also says that India continues to be ABB Global's third largest market after the US and China, and this market remains highly competitive.
And before we wrap the show, we'll bring you some of the key market events to watch out for tomorrow. Ria standing by.
Well, yes, let's take a look at the India-focused headlines first. Two companies, CEAT and IIFL Finance, will hold board meetings tomorrow to consider fundraising via the issuance of NCDs. On the regulatory front, Finance Minister Nirmala Sitharaman will chair the 29th Financial Stability and Development Council meeting in Mumbai, and top officials from the RBI and SEBI are also expected to attend. Also, watch out for the latest AMFI data that is likely to come out tomorrow. Globally, eyes on the UK unemployment data. And on the tech front, Apple's Worldwide Developers Conference will continue through Friday, and NVIDIA's GTC AI conference kicks off tomorrow in Paris.
Okay, all right, Ria, thank you very much for that summary. And with that, it's curtains on this edition of Markets Forward. Thank you very much for watching. We'll be right back with news and updates.